The Business Roundtable's list of priorities includes securing new high-standard trade agreements. And joining us right now for more on what CEOs are looking for on the trade front is Otis Worldwide CEO Judy Marks. She chairs the Business Roundtable's Trade and International Committee. And Judy, thanks a lot for being here today.
Thanks for joining us, Becky. It's great to be here.
All right, so we've got the State of the Union address coming up tonight. We have a presidential election that's less than 35 weeks out. And the one thing that we have heard again and again is that the trade front may be the most significant distinction between the two candidates who are running. What are the Business Roundtable's prerogatives when it comes and priorities when it comes to the trade front?
Yeah, so in terms of trade, we are fully supportive of high-quality free trade agreements that give us access to markets and equal footings to compete. That competition allows us to grow our businesses, to create more jobs here in America. And if you put all that together, whether there are tariffs or not, the consumer benefits.
So tariffs, you think tariffs would be productive at this point? Would it help? Would it hurt?
No, we think that right now there's about $50 billion of tariffs that hit the consumer today. So if we want to get consumer prices down, we need to eliminate those tariffs. That's structural. That's within the control. But we want access to markets, especially in Asia. And we were hopeful at the beginning of the year that we'd make progress there in markets in India, Southeast Asia. Those are growth markets for Otis, growth markets for lots of people. But we've yet to see real structural progress, and the other countries will fill that void.
So we have not seen progress made in the trade front in this administration. It's pretty clear that the Trump administration, if it returns, would very likely Donald Trump is a fan of tariffs, and he's somebody who will probably put those back on. How do you look at the two ideas and think what happens next?
Well, both ideas are challenging, and that's probably the best way to put it for a global business like ours. But we continue to find that there is strong business everywhere. Listen, the CEOs at the Business Roundtable are pro-trade, are very focused on growing our economy, growing jobs, and creating an economy here where people can thrive. To do that, we need business as well outside the U.S. We need to export. And in our case, we need to deliver services globally. So we need an environment where we can have predictability. These free trade agreements give us those rules of the road. And tariffs really constrain us and unfortunately do get passed through.
You have a pretty substantial business in China. I think you said about 20% of your profits, roughly 20%?
20% of our revenues.
Of your revenues come from there. You've got 17,000 employees who are there. What happens? Because China's growth has been slowing anyway, with or without tariffs. They've been slowing down, and things have gotten a little more complicated there.
Well, we're in the life safety business. We move 2.3 billion people a day, and many of those are in China. And with the 8 million units that are in service in China, we have a tremendous service opportunity. Infrastructure is still growing in China. Obviously, housing has taken some challenges. And we're saying it's going to be a down year, not just in China for units and new equipment, but in Europe and here in the Americas as construction slows until interest rates kind of find the right place for developers to start investing again. But our service business is strong. It's 90% of our profits, and we continue to grow, and that's driving great returns, double-digit EPS for our investors.
So interest rates really have a huge impact on the buildings and what that means for putting in new elevators everywhere.
For new equipment, interest rates matter because developers are working the math on when the financing works and when the ROI hits. But for service, and more importantly for the upcoming modernization and refurbishment business, that's going to proceed. Buildings are aging. People need new technology in their hoistways, in their elevators, and their escalators, and that's going to be a high single-digit growth market for us.
What would happen if the Fed didn't lower interest rates this year?
Well, we've kind of just planned on the U.S. market being down in terms of quantity of units across office, commercial, residential. And our teams have pivoted again to focus on modernization, refurbishment, and we've continued our investments in innovation. That's the beauty of this country, and you find that at the BRT. Innovation wins. And so we welcome competition, but we'll continue to invest on the new equipment side. The service business and our service business-driven business model will take us through.